All right. Hello, everyone. Hello, Paul.
Hello, everyone. Hello,
Welcome
James.
to Welcome to the midweek stream. We're starting a wee bit early just to let everyone settle in, but also because Paul is trying out some new software, so we want to make sure it's all working. And Paul is busy checking that out right this minute as we're setting up. So we will start at 1:30 on the hour or on the half hour.
Yeah.
So settle in, grab some coffee, and we'll start in 4 or 3 minutes' time. Is it all looking good there, Paul?
Yeah, I think so. I'll just double check, just waiting for it to pop up on my iPad, and then we can confirm. Such a sophisticated setup.
Yeah, well, mine's working on my other screen, but I'm not sure which one I'm tuned into because there are two different streams.
Yeah, just trying to check out the private group screen. I think it's working. I just need to just wait for it to pop up. It's a bit of a latency.
Yeah, Sean. Welcome, mate. The other interesting thing about these live streams with StreamYard is that we can't see how many people are in the chat. Or in watching. We just can't see how many people are here. And sometimes it's 100 and sometimes it's 5, so we just don't know. So if it's only 5, welcome to all 5 of you. If it's 100, welcome to everyone.
5 is enough. 5 is enough. Yeah, we're all good. We're streaming to both things, I think. So
all right,
as long
fantastic.
as everything's okay. So yeah.
All right. Well, let's just have a little chat while we wait for the next couple of minutes. There are a few things I want to talk about today, and I'll run through the list. I'm not sure if we're going to get through the list, but we'll try. First of all, the jobs shock in the US, a massive decline in the number of jobs opened on the NFP number, particularly in obviously government, but also private. So that's concerning. Quality, not quantity. Thanks, Sean. Sorry, I clicked it away there. So we must talk about that. What does that mean about, what does that mean for next year if jobs are falling off quite rapidly as they seem to be? And what does that mean about interest rates, the Fed's approach to everything? But interestingly, there's another bit of data which may influence all of that, and we'll talk about all of this as we get into the stream in a few minutes. But the UK inflation numbers came down significantly. Paul, that's good news for you. So you'll only be paying 49 quid for a pint of milk instead of 52, which is
So when I pop to the shops to get some food before I vote out the government in the next elections, it'll be great.
Yeah, exactly. So inflation massively down in England and in the United Kingdom of Great Britain and Northern Ireland. And that might influence the Fed's decision too. That's why I bring it up. And we'll have a look at the numbers shortly because I've got them up on the screen. And then, of course, we must talk about oil and what's going on in Venezuela. It's in part of the world that you also know quite well, Paul.
Very close to my heart right now.
Yeah, I'm sure. So a blockade on oil transporting tankers and further confrontation, possibly. And that will affect natural gas as well. So we'll talk about natural gas. We've got a new trade setup going on in natural gas. We've now waited long. We hope that works out. And then, of course, the backdrop to all of this influences what we're trading: stocks, metals, crypto, everything else. So it's important to get the macro picture in line before we look at the minutiae on the charts.
Yeah.
Do you agree with that, Paul?
Yeah, I do. I mean, I think we're into it now, but I think it's an interesting picture. I posted in the private group yesterday a bit of a summary about the data points yesterday, and I'm looking at it from a crypto perspective, and I think, okay, this maybe could lay the groundwork for some better risk asset movement, but at the same time, when we're trying to deal with inflation and these job numbers, it's just like, as Powell said, it's complicating the picture, but it's probably all going to be irrelevant next year because whoever's going to be in charge is just going to be like, well, I want lower interest rates, therefore,
Yeah. Doesn't matter what else we're looking at.
I mean, the data won't matter.
Yeah. I think let's have a look at those numbers. I'm going to try and zoom in very quickly and just have a look at what we're talking about because this is quite significant. And I'm going to run through the data that came out yesterday. Remember, this is a data dump. So a lot of this is catch up over the last couple of months that we didn't get data from during the government shutdown in the US. So a lot of it is catch up, and you'll see with the non-farm payrolls further down on this page. Excuse my hoarse voice again, please. That we got both months. We got October and November. One not bad, one pretty abysmal. But let's run through this. So we got a lot of data coming out of Britain yesterday. Employment generally all quite good, actually. Not too bad. And then as we move down, we see we go into the US numbers. Employment, ADP employment also not terrible, although only 16.25 jobs, 1,000. But the non-farm payrolls for October came in at 52, expected 20. So an improvement if you wish, but obviously much less than the previous number. Government payrolls dropped off by 157,000, but private payrolls dropped off as well. So quite significant and very worrying, I'm sure, for the Fed. Now, as we scroll down, we see better numbers coming out for retail sales, all quite firm. So lower jobs numbers, in other words, people not finding, not enough employment or less employment, but loads of retail sales. So a strong economy. And a lot of people are saying that AI and robotics are part of this reason. A massive increase in productivity expected, therefore reducing the number of jobs available, but still seeing outflows in productivity. And then we get to the non-farm payrolls in November, which we got yesterday as well. And that was 69,000 against previous 45 and 52. So yeah, some slightly flip-floppy numbers, but that big drawdown was quite massive. And then unemployment rate ticking up to 4.6% by 0.2%. That's quite significant. All right, so all of that. And then we must go down to today and just see what came out of the UK. And that was this morning. PPI, a little bit up. Of course, that's the pre-runner to inflation. So producer price index may have ticked up overall around the world in general. And inflation from the input side might be something to do with tariffs, not just in the US, but it affects global markets. And then going down to core inflation, quite good, really. 0.2, minus 0.2. Very good compared to 0.3. So actually negative inflation. Core inflation year on year down as well, 3.2. So inflation coming down in England, and that will influence the Fed. So that was my first point and sort of interesting thing to look at. And I've made a few, and then I want to go into the rest of my stuff, but I'd like to just pause a bit and read through some of the chat if there is anyone in here asking questions, maybe not. And then we'll talk about some of the things that I've got on my list. But I put a few things up on X. So I just want to, and so is Paul today and yesterday. So if you're not following us on X as YouTube members, please make sure to go across there. It's ArcisFX and just follow this channel. And you'll see we got 1.7 million views on YouTube. Well done to all our team. Fantastic. Brilliant news. So quite a milestone coming in December at the end of the year. Awesome. And then you'll see a lot of crypto plays by Paul and some stuff on natural gas, wheat, gold, and oil, and some other retweets. So I just wanted to point out it's a good place to go and join up because we post stuff up there almost every day, several times a day. So it's a good place to get in between video stuff.
A little periscope into the private group. That makes no sense. That's a stupid metaphor, but you know what I'm saying.
Yeah, a little peep of sorts. Yeah. So all of that having been said, maybe we should talk about Bitcoin because, and we can start with your charts, Paul, but I've got a very interesting 2-chart setup for Bitcoin that I'd like to talk about when we get to that. Maybe we can go straight into that.
I'm aggravated with Bitcoin at the moment and my charts because it's just the same, not doing anything. It's just sitting there in no man's land. So let's see what your perspective is first. Let's have a look at yours.
All right.
And
so how do I remove that? And I need to get.
There you go.
We need to remove that.
Yeah.
Hang on. No, but I got the wrong chart. How do I get the right one? Stop screen. Okay, here we go. Let me get my charts up. It's a little bit clunky, this software, isn't it? It's not as easy as you would expect. All right, there we go. Charts up. All right, so I want to point out one thing on Bitcoin that I'd like you to sort of follow on from, Paul, perhaps, because I think this is pretty interesting. And I'm encouraged by today's bounce, actually. And I've switched to the 4-hour chart. You know, many traders like me who trade on longer term charts like week charts and day charts, when things get tough and tricky, and we vow never to trade the 5-minute, 10-minute, 1-hour, 4-hour charts, but we always go back to them when we're in trouble. And so I've gone back to the 4-hour chart to see what Bitcoin's doing in a little bit more detail. Now, it's pretty interesting. I think we'll start with the day chart here. And I'd really like to hear your comments on this, Paul. Notice this bear flag that we've now broken out of. Quite correctly, it's now pushed us into a bearish scenario. At the same time that we broke down out of the bear flag, we broke beneath the 20-period moving average. That's this green line here. So 2 negatives, quite strong ones. The 20 moving average is a really important level on any chart, particularly this one as well. And we've broken down through that and the flag. Right. Is this going to continue? Let's go to the week chart. I have to go slightly zoomed out. We've got this very large weekly channel that we've been trading within and trying to get down through the bottom of. And look at all these spikes on the weekly chart. Now, not a lot of people look at Bitcoin enough, maybe. Some obviously people do, but not enough on the longer term charts. And we have 1, 2, 3, and today 4 spikes down towards the longer term channel bottom. The first one actually reached it on that big sell-off. Second one didn't get down. Third one just got to the 100-period moving average, slightly higher. And the fourth one today also got to the 100-period moving average, slightly higher than the previous one. So higher highs, but not higher lows on the weekly. But what is interesting is the way we've slammed into this 100-period moving average 3 times in a row and rejected 3 times in a row, and also the channel bottom, even though we're below the bottom of the bear flag. Right. So, fairly bearish scenario with some hope, some optimism. Now, on the day chart, you can see a similar thing. There's the bear flag. We've got to get back inside it. That's the first start, and above the 20-period moving average. And so, and also this red line, which is a flat top break up and break down level, pretty key level. And it's also coincidentally at the channel bottom and the 20-period moving average. I think that's the key level. If we can break and hold above there, and I don't know exactly what number that is, 90,400, let's say, and hold above there today, that puts us in good stead for a retest of the 50, the bear flag center line, which is a very important level to get through, and then obviously the bear flag top. But I do think if we get above the center line and the 50-day moving average, that's pretty much done and dusted. We'll be above that last flat top swing high too. And that should see us move up to at least the next resistance level, which Paul will be able to determine more accurately than me. But I think it's around 106 or 108. I've got a line drawn at 107, so sort of in between. But it's one of those or somewhere around there. But I think that looks quite good. Now, I'm going to finish off with this on Bitcoin because it's not really my area of expertise, and I'm going to defer to Paul.
You said that to me earlier, right? And I'm like, now, I do take exception, right? Yeah, I'm a crypto expert, but I'm like, TA is the universal language of trading, which you have extremely experienced in. So I don't think you do yourself justice there.
Okay, fair enough. Maybe it's a bit of false humility. But anyway, here we go. I want to just remind you, the day chart. There's the bear flag bottom. There's the red line, which is a sort of a flat top breakout level, and the 20-period moving average. That's the day chart. Now, let's just leave it as it is and switch right across to the 4-hour chart. It's fascinating. I've left the same green arrow. Let's just switch back. That's the green arrow from the day chart. It just looks bigger because it's on a 4-hour chart. Exactly the same arrow. And look what we've got there. Not only the red line and the channel or bear flag bottom, but also the 200, 100, and 50-period moving averages on the 4-hour chart, all in confluence. And I reckon that adds weight to my argument that if we can break and hold above that level, we're in good stead for a test of the top channel center line and this flat top, and then eventually the channel top, and then a move up into perhaps 106. Yeah, that's my philosophy and my thesis for now. But we've got to hold here, Paul, and we're at the 20-period right now on the 4-hour, and I'm looking for this to break through and hold above the 20 at least to get going.
Yeah. I mean, let me. I've co-opted a chart from one of our group members, as I think it. Put the chart. Do you mind if I just put the chart up, because I completely agree.
Yeah. Go for it.
So I co-opted this, and he posted it in the chart. Posted it in the group, and he says, "Hey, look, it's this diagonal support line is still holding." And then by the time I got to it, it had broken. So I was like, "Well, no, it hasn't." But it's probably it reflects what you're talking about. And if this is 92, 91, right up here, 91, 92, this is where we need to get to ultimately, right? And this is, on my chart, you've got the same. I haven't got all the moving averages you've got, but on this chart, you've got the same moving averages sweeping in like here. And it is quite good that we've seen this macro higher low here, but obviously we haven't put a higher high in, and we're stuck below 89K. So this is a significant area to get through. But as you've just highlighted on your chart, it's not just one thing; it's multiple things. It's this, it's this, it's this, but this is a good thing. Now, if you look at like the downtrend, right, and then the markdown, and then you look what's potentially happening, right. That's we're trying to bottom out. Now, I think it's perfectly reasonable that Bitcoin couldn't hold 89K because of this compression, this sort of triangle between these moving averages, and yours are pretty much in the same location because they're all coming down together. But the fact that we haven't steeply dropped down even to this kind of ideal entry zone, which I've put on here, which is straddling 81K, is pretty good. Now, I'm not suggesting we're not going to come down. This is obviously ascending triangle, but there's so much resistance overhead. I would think that, I mean, if there's something, if we get some bullish news or something happens, right, then we could very easily just get above these and then we're away. But we just don't have that signal yet. And because what buyers are waiting for is ultimately a bullish signal of some sort, and we're just getting bearish signals stacking up. We're losing, we're coming out of the bear flag. So, but we do see it trying to bottom, but it's difficult to come in here because we're right below resistance, meaning we either need to wait for one of two things. We need it to come back down into these order blocks where everyone is waiting, right? And ideally put in a higher low. So we've got a double bottom on the higher time frames, right? Which is not as clear on the 4 hour because it's just spread across. And then we go up from there and kind of almost kind of what's the word? Strafing? No, is it? I don't know. But just coming in, just trying to bypass all of this underneath it. That's the scenario. That's good TA. That's probably what will likely happen. But if we do get some bullish further, I'm not quite sure where that's going to come from right now, but we can just break through all of these right now and then range back in here again without any obstacles overhead, and it's kind of free running. So those are the two scenarios. But ultimately, you have to say to yourself, you can't enter a trade here and front run that. You've got to wait for the breakout, and you can't come in here either to front run that because this is the logical place to enter. So this is why I was getting a bit irritated with the Bitcoin chart earlier, because it's like, do something which I can trade, right? Because right now it's a short play, really. It's a short play. If you look here, wait for the session to come up here, and then that's where the probabilities are, right? And then we come in here and take profits. But it's frustrating. It's rubbish trading right now for Bitcoin for sure. I mean, that's my take on it. I think it aligns with your chart.
I think where are we? I just think that this bear flag, so-called, and it is a bear flag, let's be honest. I mean, you can put lipstick on a pig, but you can't convert it into a bull flag. So it's a bear flag, and we've broken down through the bottom.
Bears deserve their flags too, right? They have.
Yeah, exactly. So we've broken down and we're below the 20 and the flag bottom and the horizontal red line and all that sort of thing, and my green arrow. But so many people, this is the thing with trading, so many people, and it happens all the time, have been observing this and calling it a bear flag. If they just called it a consolidation with a potential this or that, or called it something else, all over X and YouTube, maybe it would be slightly different. But because of that, I think it's just a little bit too obvious. I've seen this many times over 30 years of trading, that and it wasn't so, actually, you have to remember, when I started trading, there was no social media, and there was none of this sort of echo chamber that happens these days. And so when it's all over X and
that sort of thing,
sorry,
drawing on walls.
yeah, exactly. And Wall Street bets and places like that didn't exist. And so we didn't get this crowd hype driving things one way or the other. Too many people were calling for a bear flag here and a move down to 75 or 4 or 6, something like that. Too many people. It's really as simple as that. So psychology is a really important part of trading. And too many people got short as well, leverage shorts. I know one chap who's is a chap that I speak to almost every day, who has gone quite heavily short here on the break of the bear flag. And I cautioned him and I said, just be careful, wait for a move down, wait for a retest from the underside at least. We got the move down, we had no retest. I expect we'll get the retest at some point, and maybe that'll be that, and we'll just move down from there. But I just have a feeling that this might be more bullish than bearish because of the psychology behind it.
This is the game. So we talked about that short setup because that's what the TA is indicating. And now we're not suggesting shorting it to 50K. We're saying shorting it to 82, just something to trade, right, with the probabilities. Okay. And then if it goes in the other direction, you're like, well, okay, the 20% probability won. Oh, well, but that's just the way it goes. But the key thing is this, right? Especially involved with a volatile asset, especially in Bitcoin. Now, this applies to all markets, of course, but Bitcoin does this all the time because essentially it's the trap, right? It's the bear trap, right? and this is, as you say, it's all about the hype. So you have to understand that if you are feeling like, oh my God, Bitcoin's broken down, right? It's all over. Then that is an emotional reaction, which is triggered by some people with big positions and ideas about what they want, right? Triggering those emotions and trying to get me to do something they want, right? Which probably is to exit my position or short my position, and so they can scoop up the liquidity or catch me out or whatever, and the exchanges
Yeah.
make loads of money, right? That's the idea. And the problem is, though, you can say, okay, so I'm going to be cautious here. So I mean, my advice with bear flags is, and the breakdowns of them, you get the initial move, right, which we've got, and then you've formed a base and we've rebounded. Now, for me, to confirm that's not a bear trap, I will want to see it dip below the swing low, and then that is the safest confirmation to potentially then look to enter a short play. And even if you say, right, I'm going to enter a short play a little bit higher, but that's the signal you need to protect yourself from these bear traps, which happen all the time. We see like these lovely, before FOMC or big data points, we see these ascending triangles, so these symmetrical triangles forming, and it's like you look at, oh, this is great, so it's a 50-50, upside break means it's bullish, downside break means it's bearish. But almost every single time it happens, Bitcoin will either go down or up and down, and it's completely irrelevant because people are trying to manipulate the pattern and manipulate you, and therefore that's the challenge. So if you look at the market with I came with the saying I was rattling on my head last night, which was, what's one thing traditional stock traders have in common with experienced Bitcoin traders? They both look at Bitcoin with skepticism, right? Okay. And
fair enough.
That's what you have to do, because it's total manipulation a lot of the time, and you have to play the game. You have to be the one which is trying to steal other people through their emotions, and not that. And it's a complicated game. It's chess, it's three-dimensional chess. And it's difficult to trade. I mean, how do you trade that as a beginner? How do you teach a beginner to trade that? Right?
I mean, it's tricky. It's tricky, but it's a lot of time in front of the screen. I've been doing this for a very long time. So have you, Paul. And a lot of trading is about, just observing things that have happened over and over and over again. And that's how we know that things like, let me just go back to my charts, the sort of breakout retest is a normal and natural occurrence. And we learn that. And unless you've actually observed it yourself and seen it happen over and over again, you probably won't believe it's true. But this is what I'm talking about. The breakout, the retest will be to the underside of the breakout level, which is the bear flag. That's a normal thing to happen. And just that one example of many, many things that you'll observe on your charts over time. And you can learn from books. When you learn from books, I've got books on my table all the time. I look at them quite regularly, candlestick books and technical pattern books. But take the information you get from books and study that on your charts. See if you can find the same patterns and same setups. So I think that Bitcoin will at least retest the underside of the flag for that reason. And we may get into it because of the psychological reasons that I spoke about before. Everyone who got short here, and particularly those on leverage, will be on tenterhooks right now because we've come down, we've bounced up quite sharply in the last couple of hours. And if we do get up through the red line back into the channel or the flag, a lot of those will have to be managed or stopped out or whatever. And there could be some consternation, which will cause this to flutter around. I think we're going to get into the channel, come back to the bottom, maybe bounce out to the top of that channel. I actually got long on the breakout through this black line. And I got long on the initial. I've had to hedge that position now, but we got long on the initial break. And I thought, well, that was a fake break. As you can see, it spiked up through the top, fell back in. And we did it again, 4-hour candles, about 5 candles later. And I thought, okay, well, we're going up now. That's fine. We're going to get through. We weakened the top, and now on this occasion, we'll get through. We didn't. We came back down. And subsequently, I've hedged that addition. So I'm now carrying a short position on Bitcoin because of that, which I don't really want. It's a hedge position. So I've now got longs and shorts, which is always the situation when you're hedging. I think, we'll probably try and do something like this. And then when we get back down here, that'll be the question mark. Are we going to fall back out of the flag and carry on down to 74, 75, 76? Or will we hold back in the flag and just keep going? Of course, we get to get into the flag first, and we're not there yet. But what is fascinating is this cluster of moving averages, where the green arrow is a price magnet. It's very attractive for the price to reach up into that level to test it. But it's not only interesting for that reason, as you said, Paul, it's multiple reasons why this level here is crucial. And if we go back to the day chart, you'll see it's also the 20-day moving average. I don't know why my internet is so slow. I hope the stream's coming through okay. So there's the 20-period moving average at exactly the same level on the same chart. I haven't changed anything. And there's the line I drew up. So yeah, something like that. I'm hoping for and expecting. But if we fall down through this level, viewers and members, I will be hedging the entire lot. It's a tweezer bottom with, this is a 4-hour chart again, a day chart, sorry. So it's significant. This is yesterday. After the NFP, which is also significant because the poor jobs number sparked the market to move higher, including crypto. And in that process, we formed a tweezer bottom and a piercing pattern candle with an equal low, almost equal, slightly higher actually, but we moved more than halfway up and closed more than halfway up the previous bearish body. It's a genuine reversal pattern, and it's happening at the bottom of this pretty crucial level. So that's what I think. I think we're going to try and move up. I think we'll try this line again. And if we get there and break up through there, we've got the channel center line, flag center line to contend with. And then after that, it should be a little bit easier until we get slightly higher up.
Yeah.
It all depends on whether we can move up. Yeah.
Yeah, I think that's a viable thing. And I think the problem is with that, it's difficult to trade. Whereas,
Yes.
you waiting and you got your entrance. So I think, my position at the moment is, we're going to come back down to approaching 82, 81, looking for that higher low, because we've had the, if I just switch back to my chart just for a second,
Sure.
This is the idea is that, so we've had this very strong markdown. We've stopped essentially at what is support, significant support, right? We've had a attempt to essentially bounce from there, right? And that's the first kind of relief rally, right? And then now we've got to find our feet, right? And the finding our feet is getting that reversal pattern or something, because this is where traders will look to come in on, because it's a manageable area to come in here, look for the higher low, and then ride it up. So that's one play, and based on the TA, that makes sense. But knowing Bitcoin, of course, if it does break above here, we also have to recognize that then, like you said, we're just waiting to enter on the flip side, right? And then we've got the support of these moving averages again, most likely. So there's two possible scenarios for Bitcoin, both of which I don't think we can recommend entering until we've seen that direction, which is, again, the frustration I was expressing at the start of the stream.
Yeah.
Two options, I think. Take your bets.
Yeah. So, and my only decision that I have to make personally, and perhaps some of those in the private group who are maybe long as well, is I'm long on Bitcoin already, but I've now started hedging. My only decision now is to whether to hedge further if we break down further, in which case I'll be fully hedged, and we'll see how low we go. At some point, I'll take the shorts off, take the profit on the shorts, and get long. I don't know when.
Actually, it's making a move now.
Yeah, it's just moving up. Yeah, just moving up very sharply suddenly. But my job now is to get rid of the hedge or add some more on, depending on which way this moves. It's moving up very violently right this minute as we're talking. It's just moved up by, like, I don't know, $1,000. So my job is to get rid of this hedge, which I'm now dragging up underneath us with my long positions intact. And I'll do it if we break. If we do this, basically. And if we don't do this, I'll be able to get out of the hedge at some point along here. If we don't do that, that means we're going down below the bottom, and this tree's the bottom, and that means I'll be hedging the entire lot. Yeah. The way it looks right now is pretty good, and it's following the path that I expected it would follow. Let's see what happens when we get to the channel bottom, flag bottom, and this confluence of moving averages. I suspect we're going to get right into those moving averages pretty rapidly and firmly, and maybe get rejected from there just as sharply. Let's see what happens. We're at the bottom of the flag right this minute. Yeah. As soon as the stream finishes, I'm going to have to start unhedging, which is not a bad duty.
I'm looking at a Bitcoin position I've got at the moment, and I'm probably looking to short it from here. Again, like once we get the break of like maybe the 4-hour 200 MA is the obvious line in the sand at the moment. Once we get a break of that, then we may need to change. But it's curious, and I think it is very, very challenging right now to trade. But the most important, and the reason why I'm so grumpy on TA and just like, well, nothing to do right now until we've got confirmation, because it's always a game of confirmation. I can't tell you how many traders who've been trading for a little bit, and I say to them, like, what's your confirmation strategy? And they're like, what are you talking about? I'm like, what do you mean? And I'm like, confirmation. right, confirmation of your premise, right? So, what's the trigger point for your trade and all these sorts of things. And when you, like yourself, James, when we get a bit more experience and a bit more instinctual, right, then you can be like, well, typically if I enter, like, so when you get these, like, when you get these fake change of characters where you get these higher time frame liquidity dips, right, you've got the experience to be able to come in, scoop those dips, even though technically the TA is giving you a bearish signal, knowing that half the time you do get the reversals from those points, right? So you're not trading blindly, but people who don't have that much experience don't have that insight and instinct. Therefore, they have to play a little bit more of a rudimentary confirmation game, and it can be frustrating for them because the crypto market, as an example, is sold to them on, like, buy this, it's going to the moon, and that's the extent of the emotional engagement. When really, the person behind the camera who's saying that, if he's a successful trader, that's not how he's playing it, right? He's waiting for
sure.
bullish or bearish signals to stack up and then increasing his position based on that, not like hopes and dreams. So it's very complicated, but that's why crypto's fun, right? Because when you start making money consistently in such a challenging market, you have to look at yourself in the mirror and go, I can trade anything, right? And it's a good feeling, right? So there's everybody. You want to trade crypto, right? Do it for the chicks.
Yeah, that always reminds me of the scene. Just before we carry on, this is the day chart on Bitcoin. We're testing the underside of the flag now, and if I go to the 15-minute chart, look how fast we're moving into that level. And what's interesting about it is I think it's because of this price magnet cluster here, and I think we're going to get into there, and I might just hedge a little bit more at that level as a precautionary play. In other words, get some more shorts on here, like you might do, Paul, just to protect the downside a little bit more, because I'm a little bit overexposed. I'm only 20% hedged. So I might go to 40% if we get into that cluster and see what happens thereafter. But interesting times. This is the 4-hour chart in Bitcoin moving up with great deal of vigor. Now, let's talk about natural gas and oil. And this might be of interest to you as well, Paul, being associated with that part of the world, Venezuela. Now, we heard from Trump this morning that there's a blockade on Venezuelan oil tankers, or proposed blockade. I'm not sure if it's practical to do it or even desirable for the US to do it. It's a different story. But let's say it is going ahead, and that I think just the fear of it going ahead is what pushed the market up. If I look at this on a very short-term chart, on the 1-hour chart, you can see there was the announcement, and oil moved up sharply, spiking up, collapsing back down, and then moving up again. Now, I just got short on oil right over there. I've moved that thing across. This is the 1-hour chart, so I've done it on the day chart. Let's have a look at the 4-hour. You can see we got short at the 20-period moving average, like we often do on the 4-hour on WTI, and we've moved down, forming an engulfing bearish candle. So we're immediately into profit. This is our first trade that I've taken on oil. Well, we got short there, and we got short there. We took profit, hedged it actually at exactly $50, and we sold again at $56.75. That's this red arrow here, and we're moving back down. My target for WTI oil is back down to this double bottom that we just tagged. I think we're going to get through. There's not a lot of volume there. These are little spikes. Most of the volume is just above us, and we've got through that already, churned through it bit by bit. Took a bit of effort, as you can see, and then we got through. Okay, we cleaned out all that volume. There's not volume here. These are the spikes, and I think the next stop is $50, 50 round, and you'll see if I zoom out, it's that level there where the black line is. And if we go all the way back to 2019 at $50, look what happened, $50 right there. And it's a market structure break level. And we're right there now, or just above. We're at 55, 56. So we got out at 50 and we resold at 56.75. And the next target, we got out of 55 at this double bottom. The triple bottom is at 50, that one in 2019. We got out of the shorts at 55, resold at 56.75, looking for a move down to 50, and I think probably 48 before a bounce, probably all the way back to where we're trading more or less. So that's my play on oil. We're short. We're a couple of dollars, well, $1 or so in profit again, and we've been short all the time. I've been short for about 3 years on oil. We may have bought it once or twice, at least twice over here at this double bottom. I think was the only time that we've ever bought WTI oil since about 2022, when we peaked at about $120 or so. We've been shorting ever since then. Notice that we're moving gradually down in a falling broad-ish channel, which is actually eventually going to resolve to the upside, as you can see indicated by my arrow, because it's not going to, it's too weak, it's too shallow, it's too insipid, and it's too dribbly. And it's just too boring. And the market will bounce out once we get into a pretty cheap level for oil, $50 or $48. That's my plan. It may not work out. And people are saying, well, why are you selling oil when there's a blockade on our Venezuelan oil shipping? And we've seen this before. We've seen blockades, we've seen tariffs, we've seen Russia, Ukraine, all sorts of stuff constantly driving up the price of oil. We've seen OPEC Plus trying to get the price of oil up and then down, and then next day up again. And the smaller countries trying to prevent these wild swings in prices, OPEC just gathering up the profits. And so my general feeling for oil is that it's going to move down further. It's what the US wants. It's probably what OPEC wants, actually. The cheap oil prices, although they suffer from reduced profits, they can just increase volume. They got plenty of it, and they always retarding volume, whereas the smaller countries can't keep up, can't operate when oil prices are really low. And so I think they're going to go lower, squeeze out some of the smaller oil producing countries, and then that will eventually end up in a short squeeze. The Venezuelan situation, I don't think is a major problem, and I'm willing to sell into any rallies on WTI oil. It's not a big source of oil for the US, and it's not nice, it's not pleasant, it's unsettling, but I don't think it's going to put major upward pressure on the price of oil. I don't know if you have any thoughts on that, Paul, from your feelings and connections. Maybe you've heard some different news about what's going on there.
No, I think what you need to understand about, okay, so let's say, like with everything, the US wants the oil, right? We go into Iraq because there's a mass destruction. No, there isn't, right? There's oil, right? Venezuela, of course,
they want the oil,
tons of it, but their infrastructure is in complete disrepair, not just in terms of getting it out of the ground and refining it, but in terms of like the grid, the power, the resources you need to do all this stuff. So if there's any, so obviously we're talking about we're worried about right now the blockade affecting prices, pushing prices up and causing problems, right? I agree with you. I don't think it's really going to rock the boat that much. But if there's, on the flip side, if, for example, there is, maybe in 6 months' time, we finally get rid of that terrible, terrible criminal who is in Venezuela, Maduro, and we move towards something better, and the US, as a part of that, come in and they try and establish it, and then we get bullish news like, this is great, America's just tapped all of these new oil supplies. You're not going to get anything for 5 years, right? You're not going to get anything from it. So the whole thing is probably a bit of a wet blanket in terms of its impact, positive or negative, on these things, because the output from Venezuela now is just, this is why Venezuela is in this situation, because they ultimately, and this is not the Venezuelan people, they're amazing. What I'm talking about is they put all their eggs in one basket under Chavez, with an economy which was dependent on their oil. And he was like giving out TVs and all kinds of stuff to the citizens about the prime, but then they didn't have any cows or farms or anything like that. And then when the oil crash happened, it destroyed the country's economy. And that's where we are. So what happens with Venezuela, right? Their output is nothing compared to what it was. It's much less impactful. And all we can hope is that the Venezuelan people eventually will benefit from stabilized thing, and then maybe then the supply will be beneficial for the rest of the world, and things will ease, of course. But that's going to be, it's a long-term play. So whatever happens over the next few months, I don't think is going to have too much of an impact, and whatever happens over the next few years isn't going to have much of an impact, right? It's going to be a very slow burn, but we should be paying attention to what happens, but not necessarily from this perspective.
Sure. Yeah, and when the Houthis in Yemen were attempting to block the Straits of Hormuz, I think is the correct word, oil price went up for about a day, about 20%, and it crashed down the very next day. So even that couldn't keep it up. And of course, OPEC doesn't want very high oil prices, even though you think they might want high oil prices, they don't. because of the competing countries. Anyway, let's talk about natural gas. My voice is busy failing me, so we're going to have to end soon, but let's talk about natural gas. And our crypto of the energy world, I suppose, the way it trades, our altcoin of the energy world. It's not gas, it's not oil, it's the alt to oil, maybe. Really, it actually is. It sort of is, isn't it? It's like a minor token. It's like a secondary token to oil, but it's a good one. It's like Ethereum, and it's wild, and it's got lots of volume, and it's exciting. So what's going on? Well, just to repeat, we were short at all these red arrows. We suffered a bit through this rise up. A lot of people struggled with that massive move up. It was just a short squeeze and out of the blue, really, and then the gap down. That candle there is a gap. So squeeze up, gap down. Obviously, it was going to go down from there. We held our shorts. We had to hedge this bit in the middle here when we moved up, and we unhedged on the way down. So all good. We got out of that. I re-hedged at the trend line. Now, it's a short-term trend line in the middle of a longer-term pattern. And when that fell through, I kept the hedge, bought some more there, and bought some more at the bottom. And I've now exited that trade from the bottom. I took profit at 397 or 398. So that as a 10-cent profit. And I'm still holding this trade and this hedge. I think we're going to move up. I think we're bullish on natural gas overall, but it doesn't mean we might not faff around here for quite a long time still. It's still not bullish. We haven't even surpassed the recent, if you even call it a swing high. It's one-way traffic down. But on the day chart, and I pointed this out several times on X, we have 1, 2, 3. The white candle is also a bearish candle because it's below the 20 and it's got a low high and a low low. So that's 1, 2, 3, 4, 5, 6, 7 down candles. We either get 5, 7, 9, 11, 13, etc. on most charts. Natural gas doesn't really get beyond 5. I notice here though, and I said this hardly ever happens, but look what happened the last time we got 7 candles down. It was just the other day, well, October. Not the other day, but not that long ago. And not very impressive, just very tiny little ones, but 1, 2, 3, 4, 5, 6, 7. And then up we go. We've got exactly the same here with a lot more volatility, but 7 days down, even though that white candle looks bullish, but it's not. And we're now bouncing out. So I think we've got a chance of a short, sharp squeeze like we had over there in October, maybe even today, who knows? It looks like it's got going already. And if we zoom into the 4-hour chart, you can see we're trying. It's not convincing. We need a big white candle to get this sparked off. We haven't had that yet. And so we may drop down. I'll re-hedge the whole lot if we break down below that level there. I'm not going to take risk on this trade more than I've already got on. We've reduced risk now by taking profit on this long trade from the bottom up here and by hedging over there. And at the same time I hedged, I also reduced overall size. So we've managed this trade really, really well, even though it's been one of those violent moves in natural gas in the last 6 months, I suppose. So, massive move up and then followed by a one-way correction. This is very tricky. If you've struggled with natural gas in this contract, you're not alone. Almost everyone has suffered through this move, this violent move in natural gas. For those in the private group, I hope, and many of you did manage to survive it. Some of you did not. And you took the wrong trades at the wrong time. You didn't hedge when you should have or could have. You oversized and you had leverage on and got wiped out on the moves down. And actually, for some, on the move up with that big spike high. So some of you got shellacked on the way up and shellacked on the way down. It's not good. And there are ways to prevent that. And if you don't know how to do it, you shouldn't be trading natural gas, or you should learn how to do it. All right. I've met too many people over the last 5 years recently. More and more people are trading natural gas for some reason. Well, I know why. It's exciting. But in the last 5 years, I've had so many people tell me that they've lost fortunes on natural gas. And that's why it's called the Widowmaker, folks. It's not for no reason. So, don't trade it if you just don't know how to do it. And if you don't know how to do it and you are insisting on trading it, use very small position sizes and get used to the way it flows. It's a very, very difficult instrument to trade. I think we're going to hopefully break up through the 20-period moving average. Notice how the 20-period on every chart that we look at plays an important role. We were just looking at Bitcoin. We can look at gold. The 20-period moving average is in play there too. And we're now currently rejecting here ever so slightly. And, if we move down, I'll have to hedge the whole lot. But if we do get up through there and bounce off here, we're looking for a reversal candle from the breakout point. And only if we get that, I will unhedge a little bit more. I'm still carrying a 30% hedge, 20%, 30%. I'll probably take another 20% off and then see how far we can get. And eventually aiming back to the underside of the channel, the point of control, and the market structure break just below that rollover gap that we experienced on the weekend, on the contract rollover rather. So that's my plan on natural gas. If you have any questions about that, now's your time to ask, because we've got about 4 minutes left. And if you're not going to ask me in the private group, you can ask me here. If you're not in the private group, you better ask me now on natural gas.
Yeah.
So that's all I've got, unless some questions come up.
Can I answer? Can I just answer? Wait and see if we get any questions about natural gas. Can I just answer MD's question about Ethereum at least? Is that all right?
Sure, of course.
And just switch over. I'll reserve Sol for tomorrow, maybe. But let's just have a
all right. Maybe we can finish on that, Paul, because let me just finish up by saying I'm still long on the Nasdaq. Still long on the Nasdaq. Several names like MSTR, Tesla, Coinbase, Nvidia, and Circle. Just bought Circle yesterday. I think this is a great one. This is a new instrument, just been IPO'd. It went from $60 to 280. We've come back to $60. I think it's a great name, and we're right back at the point of entry into the market. And I'm long on Circle. That's all I want to say on stocks. Also long Nasdaq, S&P, and a few other names.
You got anything for wheat for Lucky?
Oh, wheat. Yeah, we went long on wheat. Lucky, you know what we're doing on wheat. You were there. You were in the room when we talked about this. Wheat has reached the breakout trend line, which forms part of a falling wedge. I thought we were going to get further down, but we didn't. And as a result of that, a triple bottom here, we bought there. We got out at the top. Very simple trade. Triple bottom, out at resistance. We've come back down to the breakout level on this falling wedge pattern, and I've got long there. My target remains similar to what we had prior to this.
I like that.
And it's shown right up there.
That's nice. That's really nice. And what about some Forex? What about some Japanese yen, dollar pair?
Well, okay, yen. We've got. We'll talk about this on Friday, because on Friday and before the markets open, we'll find out in the middle of the night, our time, Paul, whether the Bank of Japan is going to raise interest rates. It seems like they will. UEDA seems to be angling quite strongly into that direction. And if the Bank of Japan raises interest rates, I expect we'll see the dollar yen coming off a bit, probably just down to the 200 moving average and the bottom of this channel to start with. There's also sort of a bear flag, although we've broken out through the top, not the bottom. So that flag is kind of nullified. I can get rid of this line eventually, or this channel. But I think we'll move down somewhere into channel center or channel bottom. And then thereafter, I don't know. We don't want to see it moving down as fast as we have done in the past with these massive carry trade unwinds, because that will drive the stock market down. So I wouldn't mind a slow dribble down here just to get out of our position, get some profit maybe down here somewhere. And then I don't know what'll happen after that. It's a play that I'm not very happy with. It's just a messy old instrument. But I think generally the dollar is moving down, and that should drive most of these assets in the opposite direction. So euro up, pound up, Aussie up. We got out of our long Aussie trade at the top there, at the bottom near the Bollinger Band. We got long down here. And I might try and get long on the Aussie again if we come back down to the 20-period moving average here and the channel breakout line once again. Just again, a breakout, pull back, and off we go. And I think the target for the Aussie is into the 0.7s. I've got the first target at 0.69, but when the Aussie really gets a bit of strength under its belt, it gets well into the 0.7s, and we could see 0.75, let's just say, mid 0.7s. That's where the Aussie likes to be when everything's a bit positive for the Australian dollar. We've got platinum and agricultural crops, gold, and rare earth minerals, all flowing out of Australia in gusto right now. And that is propping up the Aussie dollar. As we see general weakness in the US dollar, unrelated to what we're seeing on the Aussie. So I think this is a good play. If we can get long here too, but I don't have a position on that at the moment.
Question about rare earth. No interest in that was a question from Sean.
I don't have that. I'm not able to trade that, Sean, REMX, but I will look into it. I was thinking about that the other day, actually. And I'm glad you posted the ticker up there, because I'll have a look at that. Maybe we can talk about that on Sunday, actually, in the live stream. So thank you very much. REMX. Yeah.
Okay, well, let's just touch base with Bitcoin, and then we'll go to Ethereum, then we'll call it a day. So I have just taken a short on Bitcoin, and let me explain
Awesome.
why. It's just a small position. So you can see this orange line is where I've just taken a short. Okay, essentially, and the premise of it would be, because we've got this confluence and it's a nice little pocket, right? But this is the key thing. This position, if it is good, because if we go in the opposite direction, right, we're most likely going to get a wick down there, right, to my position, because we're slightly above resistance, which means even if I'm wrong and the market reverses, I can get out with very little risk. And this is the game in crypto, right? You've got to, your risk management is all part of your decision to get in, right? So, it's not really about, okay, so the TA is suggesting we could come down, but as James and me were discussing at the start, we could have a break. So how do I do this? Well, I try and get a position where when I enter it, if we do go in the other direction, my entrance is going to be tapped, almost guaranteed, hopefully, before we ascend higher, meaning I've got options, right? So that's the idea. But it's just a small position, it's no big deal, right? So Ethereum, MD, I'll get into Solana tomorrow, because I'm working on the chart. But this is Ethereum USDT daily versus USD 6 hour, and you've also got Ethereum versus Bitcoin daily. Now, you'll notice that Ethereum versus Bitcoin daily is also coming back to retest support. This previous play, which we had for Ethereum versus BTC, was perfect almost. We had a nice touch of a retest, and then we almost came up to the TP level. But now we're coming back down for the proper retest of support, which is around 0.3258 for Ethereum versus Bitcoin. But then we have nice confluence with also Ethereum retesting the flip side of this pattern somewhat clumsily. And also on the daily chart, we are essentially tapping key support just above 2842. So it looks like that if Bitcoin can play along, which of course we don't have confirmation of yet, right? We have to presume it's going to head down. So you might want to wait for a nice flush entrance again in case it heads lower. So you've got a manageable entrance, which you can get out of if you're on the flip side. But we have something potentially playing up with Ethereum. And when you have confluence across Ethereum with multiple pairings, as well as multiple timeframes, that's pretty decent. Right, and it shows kind of where the sentiment is. So for Ethereum, what I would say is you're looking for it to come in. I mean, I would say maybe the Ethereum versus Bitcoin pair is a little bit better because it's going to be more accommodating if Bitcoin heads lower, whereas the Ethereum versus USDT pair is going to suffer a little bit on the back of any downwards movement. But you can see that we're having a potential play lining up on the back of a double bottom here. So you do want to keep your eye on around 2842 and see how it's interacting with that level. But if you just draw draw a nice little, there you go. You see there's nice confluence, right? Potentially like a bump and run play of sorts coming here. So there's a few potential options, but just remember your entrance needs to reflect the uncertainty, and therefore don't try and be like, well, it's going to get away from me, therefore I'm going to enter a little bit above support. Try and come in as flush as you can, because it just gives you more options. So that's all I'll say to that. But that's Ethereum, and I'll get in MD to Solana tomorrow if you'll join me for my crypto live stream. But yeah, that's me.
Yeah, I've got one more thought on Ethereum. You can't call Bitcoin a bear flag and not call Ethereum a bear flag. That's all I'm saying. And this one looks better than the Bitcoin bear flag, I have to be honest. We've got a swing low there and a high there and all these perfect touches at the bottom.
Yeah.
So I'm bullish on Ethereum, but I'm just saying, you can't call one a bear flag and not the other. I'm not saying you, Paul. I'm just saying us in general.
This is extremely important, because you have to. People sometimes they're like, well, why have you got 6 different Ethereum charts? And I'm like, because I need to see like how many of them are bullish, how many of them are bearish across multiple timeframes, and I just count up, and then the one with the number with the highest number wins, right, in terms of bias.
Yeah, or the one that supports your argument or your bias.
Well, yeah, I mean, we try and let the charts inform our bias and not our bias inform the chart.
Yeah, exactly.
But that's the thing, and like, so this does cause a bit of confusion in the public, because I will post 3 competing Bitcoin premises, and everyone will be like, "You're flip-flopping," and I'm like, no, I'm not flip-flopping. I'm saying this is the picture. I'm informing you. Now you look at it, you look at your bias, and you think, is your bias correct? right? If you've got two bearish charts versus one bullish idea, your emotions want to look at the bullish one, but the court case is going to be won by the bearish ones, right? And that's how you need to look at it. At least that's how you get probabilities in your favor. Nothing's guaranteed, but that's the game of trading. And that's unfortunately the unsexy part of just charting everything you see, right? And that's your edge.
Yeah.
You know, it's not sexy. Yeah. It's just chart to your heart's content, right? And get all the big picture. So, you know, that's it. But yeah. Good stuff.
For sure. All right, folks. I've got nothing else unless there are any further questions. Paul, I don't know if you've got. Yeah, I think that's it. Oh, there is one more thing we could just finish off with, Paul. Maybe it's best left to you, and that's the changes in the membership structure. We're going to make things cheaper for folks to become part of this story.
Yeah. So this very stream, we're also considering about what we do with it, right? But the idea is that we want to make sure that everyone, if you're just paying a couple of dollars or you're paying $10 or whatever, gets the content which is appropriate for that your input. And if you go all the way to the private group, of course, you're getting your money's worth. So we're going to, at the moment, we have a supporter tier, which majority of our members are on, and they get access to this live stream, right? And afterwards. Now, if you want to get access to our membership content, like Crypto Pulse or James, your membership videos throughout the week, which are exclusive to them, you have to be on the fan tier, right? Now, what we're going to do, we are going to lower the fan tier slightly by just a couple of dollars or something. We're going to look into it just to make it a little bit more accessible, right? Because so we've got that. So if you are in the supporter tier and you're looking at some of the content we're putting in the members and you think, I want some of that, we are going to lower the price just very slightly over the next few days, permanently. So you may feel a little bit more welcoming to get access to some of the exclusive content we're doing. So that's what we're doing at the moment, and this based on feedback and all kinds of stuff as well. So that's what's happening. And tomorrow I've got a crypto live stream. Tomorrow you've got a tech video coming out as well, which is to public. Is that right?
Yep. Tech
video from you early tomorrow, which is going to be great as always. And then we'll have a live stream with me, for sure. And then Friday's altcoin gems. So you've got something to trade, right? If the market gives us some opportunities. And then of course you'll be back on Sunday with your very famous Sunday afternoon stream.
Sunday Night Live.
Sunday Night Live.
Yeah. All right. Fantastic. Paul, thank you so much for your help on the stream, and everyone that's been attending. Really appreciate it. I was going to say like and subscribe, but that's pointless because you're all liked and subscribed already. So come and join us in the live private members group. The links are below, and you'll get to see every single trade that we all take. So it's a much better situation, and it's cheap. Not that cheap, but it's not that expensive either. So come and join us there. I've got nothing else to say, Paul. I think it's going to be an exciting day. And if Bitcoin can, it seems to be front running any moves that we may see in the stock market today, we could see a big move up in stocks as well. Just looking back at Bitcoin, still holding this level at the 4-hour into that moving average cluster. Like I said, right into the cluster. And this is the test right now. We're watching it live, folks. This is super interesting. And what happens here may well determine what happens over the next few weeks in Bitcoin. Right here, right now. I think it's great. Super excited. And if Bitcoin moves up, I think we'll see the rest of the stuff moving up as well. NASDAQ, S&P, German 30, and some of these names. And my favorite right now is Circle. Go and check that one out. Find out what they do. Look at their numbers. Look at their structure. Look at the chart. Decide whether you like it. And if you do, this might be a good place to buy Circle. I've got 2 tranches on. One from, I think, 76 and one from 80. We're currently trading at 82. I'm expecting this will go up much, much higher above the previous high at 200 and call it $300. I think we could get much higher, and we're right down at the bottom. Maybe a good entry for an interesting play. Maybe a new Nvidia or Apple or Tesla or something. Who knows?
Yeah, I mean, that would be nice.
That's it.
We can go back to the late 90s, invest in Google or Yahoo. I'm like, come on, let's go.
Yeah. Bring back those days. Yeah, exactly. Yeah, maybe Circle's the next one. All right, everyone. Take care. See you later. Ciao.